We lost $80,000 in Trump's stock market crash. Can we recover from all of this? How much did you lose in the stock market crash? Granted, the market rallied on yesterday, but before yesterday, how much did you lose? Hey, cousins. Welcome back to all of my forever cousin. If you're new here, my name is Janice. Be sure to subscribe, thumbs up, share this out if you can. Leave a comment for me. Did you lose any money in the stock market? Did you, especially for those people who are doing taxable account, most people who are doing 401ks, 403bs, and 457, you might not have checked, but for most of us who are doing taxable account, we're probably checking to see how much, and other people are just talking because, other people are talking. So how much did you lose? Comment below. Let me know how much you lost in the stock market. Okay, so people are putting out videos on YouTube about how much money they lost in the stock market. And I wanted to share this with you before the stock market rally. So here's a couple on I Will Teach You How to Be Rich channel. They said we lost $80,000. So this couple lost $80,000 and they're on I Will Teach You How to Be Rich channel. Remit, I think his name is. Love him, watch him. Can we recover from this? But the video I wanted to talk about yesterday but didn't have time is a video from a sister girl that I watch all the time. Her name is Cherise, and she's a sister girl, okay? She's a sister girl. So as you can see, Black people are invested. And Cherise did a video on day before yesterday that I wanted to do yesterday. Her channel is called The Mommy Trader, and I'm going to go over there and donate to her for this video. And she said she lost $60,000, well, her and her husband, her family, in the stock market, but will not quit. Okay, and so we're going to listen to Cherise's story. She and like I say all the time, market goes up and down. If you only want the market to go up, then you do not have a basic understanding of the stock market because it goes up and down. And also you need to understand that market crashes are a normal part of the process. It's not going to always go up. You cry, you complain when you drop 10,000, but you don't celebrate when you gain 10,000. Okay, so that's a part of the process. But like I was telling people, do not take your money out. So many people took their money out or stopped investing or, I'm going to take it out before the rest of it is going to crash, because you don't have a basic understanding that the market goes up and down. And you took your money out, you've locked in all of those losses. And guess what happened yesterday? The market rallied. One of my account went up 17%. In all of my account, I didn't check all of them. I didn't check me and my husband's Roth, and I didn't check 457, 401k. Those are accounts that I really don't check. But in my taxable account that I'm looking at every day, we went all the way up yesterday. We also went down. I didn't lose. I don't, between all my accounts, we did not lose 20,000. Again, I am very diversified and in my taxable account, and we didn't lose a lot of money. But guess what? I'm staying in. You're staying in. I've been investing for almost 30 years. I have never in 30 years taken my money out because there's a stock market crash, and we've had several. Because I understand in the long run, it's going to pay off. It's going to go back up. It always goes back up. Okay, so it might be down right now, but baby, just give it a minute. It's going to go back up. So let's listen to Cherie's story. Absolutely love her. Go over to her channel. Check her out. I was listening to her other video she did. She's trying to get to 20,000 subscribers for her 20th wedding anniversary. So hopefully she'll get there, but I'll go over there, donate, and I'll share her channel on my channel. So let's listen to what Sharice has to say.
Everybody, happy Monday. The weekend kind of flew by like it always do, but good morning. If you're new, welcome. My name is Shalise, 40-year-old mama, wife, worker bee, and your investy bestie. I'm somebody who just is a regular person.
I'm sorry,
just trying to document her and her husband's journey to financial freedom.
I'm sorry, she's trying to get to 30,000 subscribers by her 20th wedding anniversary. She's at 28,800.
So if you want some motivation, make sure you subscribe and like the channel. I'm not a financial advisor, but I am an investor. I'm in the trenches like you all. I've been making videos for several years. Go back through my playlist and look, I'm very open. And we get through this together through the good, the bad, and the ugly. And right now, we are experiencing the ugly in the markets, and also beware of scammers and fake pages. But I'm in the car before work. It is early. By the time you all see this, the market should be open. But the futures, the market is down big time. It was down Thursday. It was down Friday. And it's going to be down big time. I think the NASDAQ is actually, when the market opens, it'll be in bear territory or fair market territory. So how do I feel? What are we going to do? That's what this video is for. I was supposed to put out my March dividend video. That'll be put out next Monday. I'm going to use this week to motivate you guys, and so that we can really conversate in real time, because downturns, red markets, bear markets are a normal part of the process. Though it hurt, it does sting. So how do I feel?
Okay, so downturns, bear markets. So bear is markets down, bull markets up. Okay, think bear, huddle down, bulls attack. Okay, so it's a part of the process, and it's important for you to understand it's a part of. It's like growing up, growing pains. It's a part of the process. Okay, so you need to understand that. Make peace with it's a part of the process, and it's sting, but it's going to be sweeter when that thing doubles. Okay,
it really does suck. Because let me tell you something, my husband and I work very hard. We are your regular folks out here trying to do all the things that, we're supposed to be doing by, being educated, going to work, investing our money, saving our money, paying off debt, all of those things that, you're supposed to do to get to financial freedom. So when the market isn't doing its job, it does suck. And that's just being real and being honest. Yes, you can buy the dip. Yes, you're buying assets at a lower price, but it does suck because we all are regular folks, at least most of us, right? And we are working hard to get to our version of financial freedom, whatever that may look like for each of us. And like I said, I am going into year 11 of being an investor. So I did not start, I'm 40 years old, so I didn't start at 21 or anything like that. I wasn't even taught about it, to be honest. My husband and I are both like self-learned, where we learn.
Okay. So that's interesting. And I needed to repent for something I said the other day in a video. I said, if you're 50, you cannot be helped. That's not true. I wasn't saying it like that. Because even if you're 50, you could start. Like she's saying, they just started 10, 11 years ago. I started my first job out of college, I was 24. So I'm 48. Okay. So for almost 30 years, I have been investing, and which is one of the reasons why I will be retiring when I am 52, because I've had a lot of time to invest in the market. And like I shared last year, my financial advisor, my fund manager for my 457 started to tweak my account so that I'll be ready to retire in 7 years. So I'm an example. Let's say the year I'm ready to retire and the markets drop. Would I still retire? Yes, I would still retire, because I will have 3 years of emergency money set aside so that if anything happened, if the stock market crashed, we have money set aside. Okay. So any age you can start, 30, 40, 50, go ahead. Well, this is not financial advice, but as you can see, this is a couple that started later in life, and they're doing very well.
Learned this the hard way, right? And it does suck, right? And one of the reasons why, and this is one thing I want to talk about, one of the main reasons why my husband and I will never ever have all of our assets or all of our wealth tied up into the stock market is because we do not want a single entity or the government or whatever you want to call it, having that much control over our assets, where our assets can fall 20, 30%, and that's why we love real estate. That's why.
And that's good, right? You need to have multiple sources of income, multiple avenues of assets. So having all of your money in the stock market alone is not very smart. And a lot of people are doing real estate on the side so that you have multiple assets. So real estate, stocks, bonds, so on and so forth.
We love having our own side hustles, like MT, how you're watching me. MT is a business. And so having other aspects of our entire portfolio, this is like that thought is solidified. I know some people don't like real estate, and personally I understand because it does have headaches. But the last couple of days just solidified in our minds. We do not want all of our wealth, all of our assets in the stock market.
Right.
We want diversification among our asset classes, if that makes sense.
Mm-hmm.
But most of our wealth, or a lot of it, is in the stock market, but a lot of it is also in real estate. We have 3 rentals and 1 main home. And so getting that rental income every month, or having our side businesses and making income from that to me is like being, a well-diversified, not just investor, but wealth builder, if that makes sense.
Yes.
But again, that's just for us. And that's what the last couple of days, my husband and I, we were like, yeah, we will never have all of our money into the stock market. I'm also going to, I talked about on the channel before about we like to rebalance our investment portfolio twice a year, in the middle of the year and at the end of the year. A lot of investors do it at the end of the year for like wash sales and all that.
Mm-hmm.
But because we're only in April and the market has been volatile, and it's only April and we still have a couple of years left, I want to make sure every quarter I am going into our investment portfolio, not the retirement stuff. The retirement accounts, like our 401k, HSAs and all that, that's set it and forget it. But being down $60,000 a month.
Okay, so that's important. Your retirement, your 401k, your 457, your Roth IRAs are set it and forget it. So my Roth IRA, me and my husband Roth IRA, I think I checked it on Thursday. I haven't logged in since, because that's just set it and forget it. Every month that money is scheduled to go in there, it goes in. It goes in every month or every 2 weeks or whenever I set it up for it. It goes in. My 457, haven't logged in to check it. That's set it and forget it. But taxable accounts, the ones that I talk about, is something that I'm in every day, several times a day, and I'm seeing and watching what's going on.
All the accounts combined year to date, and that's not even counting today. Because again, it's early in the morning when I'm filming this. It's raining, it's cold out here before work, but the futures are down. So we're probably going to be down even more. And again, that's collectively among all the accounts. But just talking specifically about the investment or early retirement accounts, the brokerage accounts, I want to go into those accounts once every quarter and make sure that we are balanced and allocated the way that we want. The last update that I did, I said that, I shared it in our spreadsheet. We were a little lopsided because we were like at 42% ETFs and we were 20% technology, like with NVIDIA, buying those shares, which NVIDIA is down. I think it's like at $86 or so. Give me some rope here. So all of our positions, the 401k, the HSA, the Roths, the taxable accounts, my kids' accounts are all down. Okay. And it's like, bruh, like we work hard for this, but you know what? Long term, I've been through this. I've witnessed it. It does.
Okay. So 20% in technology. 20% in technology. Oh, I could never. See, I could never have 20% in technology. I think they said each asset class, I forgot what it's called. You shouldn't have more than 5%. Okay. And so one of the reasons in our accounts that I manage, we were not hit, is because I'm not doing more. I don't have anything more than 5%. Maybe the total stock market, right? VTI. Most of our money is in VTI. And so that's the total stock market. That's over 4,000 stocks. Whereas the S&P 500 is 500, the 500 largest companies in the United States. And 20% in technology, no. My VGT ETF, 5%, no more than that. VTI maybe, I can't see it in my head, but VTI may be at 7%, but no, 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 I can't do it. Okay, for me, I just prefer to be more balanced. Okay, so that's interesting. She said 20% in technology, because technology was roaring.
does work. Just stick with your strategy. And this should actually make you really think about, the strategy that you have for yourself. Are you confident in it, even in a bear market? I'm confident in NVIDIA. I am confident in SPLG. I am confident in VTI, even if the market is down. And here's a quick update regarding VTI.
And NVIDIA, that's technology. SPLG is a S&P 500 ETF, and VTI is the total stock market. Okay, so SPLG is 500, VTI is 500 stocks. VTI is over 4,000 stocks. Okay, so be confident in your plan. You need to know what your plan is and be confident in it.
So in my investing plan video that I put out for April, I said we wanted to reach 100K in VTI. That is not going to happen. That is not going to happen because, we can only put in so much money. The market has to do its part, and the market is going to be volatile for a good while. Tariffs is a very real thing, and I am thinking about the long-term effects from this. Even if we can, things magically go back to how they were in a week from now, the market and the long-term effects of everything that's going on economically, especially globally, is going to have a lasting impact. Now, I'm not an economics guru, but I learned a little bit about it in college, and that's one thing that I did learn about, in terms of tariffs and the global economy and just unemployment. And I know someone who was literally just laid off, and it's not just the public sector that is on my mind, it's the private sector, because it will trickle down in terms of the effect of this. And I want to make sure, another thing that the last couple of days really helped me to understand as we're planning for early retirement. And speaking of that, first, let me give you an update with that. We may have to push out our early retirement date. I'm 40. If you did not know, my husband and I wanted to step back in about another 2 years, maybe 3. We may have to push that out 5 years. Why? Because again, if the market is going to be volatile, we do not want to retire early in a recession, right? Because we're going to be using some of those investments to live off of. And if we're retiring into a bear market, we don't want to do that. So one thing we want to do, and that we kind of talked about, my husband and I, this past couple of days watching the market, we want to have at least a year. Now, in the past, like 6 months to a year was like the main goal. No, minimum a year, ideally 2 years of living expenses. Yes.
Okay, so this is also something you need to realize. You might have a plan, and because of the market, you might have to adjust your plan. No, they're saying they wanted to retire in about 2 or 3 years. Mine is 7 years. Also that they wanted to have 6 months living expenses. Our plan is to have 3 years of living expenses. It is recommended you have 2 to 3 years. If you're going to retire early, you need to have 2 to 3 years of retirement of emergency, because if the market crash right after you retire, you don't have to touch your money. You don't have to take that money out and lock in the losses. You have your emergency fund where you could just lay back and relax. So on my Freedom Money channel, my goal is to save $100,000 on that channel by the time I retire, which is 6 years. Oh my God, it's 6 years. Last year was 7 years. This is 6 years. And so I'm doing that publicly, but privately, my goal is to save an additional two years of work of expenses, and 3 years for us is 300,000, because right now our living expenses per year is like 80,000. So you figure in 6 years you might as well make that 100,000. So my goal is to save $300,000 in for our retirement. No, I didn't just start saving this because we've known this is the plan. I had a plan. We're working the plan. The 100,000, I am just doing it publicly on my Freedom channel, my Freedom Money channel, so that you can see how I invest and how you can invest. So go over to Cherie's channel, check out the rest of her video.
I don't care, to be honest. I am seeing right now that if the market is crashing, and yes, you can buy low and you can wait long term, but if long term takes too long for me and I'm ready to back away, or God forbid I get sick, I want to have some type of liquid capital that I can access, and we could put that money in a CD, a money market, get some interest on it, and I'll be happy with that, because that money is not geared for growth in the markets. That money is geared for times like this. And so yeah, that's something else we were talking about, like making sure we have at least a year. We're going to work on 2 years of having living expenses saved. So that may be $120,000 or so to cover us for 2 years. And of course, we'll have like dividend income, rental income, and all that. But we want to be
okay. So go over to Cherie's channel and check out the rest of that video. I'm going to go over there and give her an orphan for this video. But I just wanted to show you a regular couple, a regular family in the United States, saving, investing, and how they lost some money, but they're not quitting. They're sticking in there. I'm not quitting. I'm in there for the long haul. You will never hear me be scared and take my money out. Never. Okay, because I've had so many years in the market. I know it goes up, down, And listen, in the end, it's going to pay off. I absolutely love you. I adore you. Thank you for your love. Remember to go to Sharice, show her love and support. And my wisdom journal would like some love from you. If you have not picked up the Word of Wisdom book, please be sure to go to Amazon. Show me some love on it. Comment below. What do you think? How much money did you lose? Did you put any money in? Again, this is not financial advice. Okay. I am not a financial advisor. I'm just a freckle-faced girl on YouTube talking about investing, how we're growing our wealth and sharing our story. Love you. Talk to you later. Bye.